Hello and welcome everyone to AUM Finance Podcast. This podcast discusses the first principles of investing and is for informational purpose only. We intend to add to the body of knowledge. Please consult your financial advisor before taking any investing decision.
Hi everyone, this is Chaitanya and I welcome you to the AUM Finance Podcast. Has anybody ever defined the term investing for you? We are launching this podcast with a very basic but important topic, investing versus speculation. And we shall be picking Nirav's brains on what exactly is investing and its definition, and also what it's not. Like we shall learn to differentiate it from speculation. What is the purpose of starting the podcast? We'll start with this, spend a few minutes on this, and then we'll go into our core discussion.
Right. So Chaitanya, we've had so many discussions in this very camp over the years, right? And one of the reasons is you yourself, you kept on telling me, why don't we broadcast whatever we have discussed over the years?
Exactly.
So one of the genesis for the podcast was this. Another was sitting here in this chair. I've been in this practice as a MP registered mutual fund distributor, as an advisor for more than 15 years now. This is the 15th year of the operation. Managing money for more than 1,000 clients now. So this chair here gives me a vantage point. A vantage point where in the very chair where you are sitting, I've met more than 750 families, right? Now, what that vantage point has told me is that there is a huge requirement for a very deep, thoughtful discussion on financial literacy. I believe financial literacy is completely missing in our country. I believe the same phenomena is in US also. See, the subject of money has never been taught in school.
Yeah, exactly.
Or in college.
Yeah.
Or in post-graduation.
Yeah. And money accountancy is taught, but I know I can very well relate to this because I'm from the finance background.
Yeah.
And I got cheated by a businessman for HYIP, that is high yielding investment products.
Yeah.
So it's very relatable that theory is one thing and practical and emotional involvement, emotional commitment is an entirely different thing.
True.
Yeah. So please go ahead.
Yeah. So you are right. And if somebody like you with a financial background can be taken for a ride, imagine what could happen with somebody who is not from a finance background.
Yeah.
And I have a school of thought that even if you're a postgraduate in finance or a double postgraduate in finance, right? And we'll talk about it, why I came into this profession, some other podcast. So I believe there was a very, very big need. There was a huge gap. People were never taught this subject in school, colleges, post-graduation. Unless somebody has taken pains himself or herself to study this subject.
Yeah.
And that too, it has never been taught scientifically. So Chaitanya, one thing I am telling you here is that, this podcast is not going to tell you, it will not give you tips. It will not tell you what to buy to.
No, those are the most useless things because they keep changing every time.
Yeah.
We want to go in for something which is long-term.
Yes.
Or tilting towards the side of unchangeable.
Yes.
Some things which are eternal, we want to understand those, create a solid foundation.
Yeah.
And from that solid foundation, we can take our temporary decisions.
So let me ask you a question. What is the difference between rules and principles?
Rules and principles. I guess...
and I don't mean the rule principle.
No.
So what is the
I
difference?
don't mean the traffic rules, naturally. But those rules can be broken. I guess both are permanent, are they?
No.
I don't.
So that is the difference. So rules keep on changing, right? Rules have to adapt to the circumstances around. Principle is something which cannot change in time.
Okay.
Like, let's say doing yoga is good for you. Doing exercise is good for you.
So these are principles.
These are principles. So even 100 years down the line, 200 years down the line, I dare anybody to say that exercise or yoga is not good for health.
Yeah.
Right?
But for a specific age or a specific physical condition, some asanas may be beneficial, some asanas may not be.
So that is beside the point. Yeah. So those are rules. So rules are small things. How to do a particular asana is a rule. Whether to do yoga or not, whether to exercise or not.
Right.
Okay, whether to eat right or not, whether you need sleep or not. These are principles. So principles are time tested. They do not change with time. So the very idea of this podcast is that we want to have a discussion. We want to have a dialogue on the very subject of investing. And we are going to lay all the emphasis on principles and not on rules.
Awesome.
So my idea is whatever little I have learned, look, it's an ocean.
Naturally.
I only collected a small glass by now.
Correct.
Okay. But whatever I've collected in that glass, I want to pour it over, share it with people. Okay. And even 10 years down the line, if a teenager is looking at this video, 20 years down the line, 50 years, if I dare say 100 years down the line, somebody listens to that podcast.
Yeah.
It should not feel irrelevant.
So what you're saying is a very popular phrase nowadays is that you want to add to the body of knowledge.
Yes.
Which is there.
Yes.
So maybe that you're not giving something very innovative because you are a follower of Warren Buffett and Charlie Munger, etc.
Yeah.
So maybe you're not giving anything new, but you are telling that in the situation, in the Indian situation, their demographics, etc., how this can be applied.
Yes.
The Indian economy is going through a unique phase.
Yeah.
The Sensex is
trying to... So let me dare to interrupt you. It doesn't matter. So again, if you say what is Indian economy going through today, then it is not a principle, right?
Oh, this is the part of the thing.
Yeah.
Changing.
So economy will go through its cycle.
Right.
I mean, we are doing very good today and we'll have a podcast separately on Indian economy. But again, as I said, what I want to discuss, especially in today's episode, is something which is ephemeral. Something which is going to be true even 5 decades later. Right? So it has nothing to do where economy is today, what markets are doing today, what
so those the core principles.
The very core principles. And you said about India, I would say whatever we are discussing. So even if an American is listening to the podcast, he or she is going to gain the same amount of knowledge as an Indian or a European or person from any other.
Basically, they are universal and eternal.
Yes.
Across space and time, these things hold true.
Yes.
Okay.
So that is the purpose of this podcast. So anybody who's listening to the podcast with an expectation that we are going to discuss what to buy today, where to invest, where to divest.
So it's not the right place.
Yeah. So it would be a big disappointment. This podcast is not for that audience. If you want to really sit at one place, understand the principles, understand what creates wealth, and more important, which is my favorite subject, Chaitanya, what destroys wealth.
What destroys wealth, right?
Right?
Because if we understand the mistakes and just stop doing some of the common mistakes, we are already much ahead and much better.
Yes.
Yeah.
So I'll tell you where it comes from. So one of my guru, Charlie Munger, and now I've become a bigger fan of Charlie than Warren also.
Okay.
Dare I say that? So Charlie Munger has a very famous quote, tell me where I'm going to die so that I don't go there.
Don't go there.
So see, the root, 15 years plus 10 years in corporate life, 15 years as sitting in this chair, managing AUM financials, what it has taught me is that if I can figure out where wealth gets destroyed, and if I avoid those mistakes,
exactly,
I'm already on my path to creating wealth. कहाँ नहीं जाना ये आपको पता हो, तो आपके साथ accidents नहीं होंगे. What not to do is many times more important than what to do.
That reminds me of what you always say about quoting Warren Buffett, that what are the 2 rules? The first rule is don't lose money.
The second rule is don't forget rule number 1. Now, I read that rule when I was in college, when I was doing my MBA from Narsi Monji. And now if you tell that rule to anybody, it is in Manila English. It is so obvious, but very, very difficult.
It gets ignored.
Yeah, but very difficult to put in practice.
Yes.
Okay. It took me a decade to understand this. This particular quote of Warren Buffett. They have very deep meaning. So if you invest in a wrong asset class and you lost money, okay, if you speculated and lost money, if you traded and lost money, so you've broken that very first principle of Warren Buffett. Rule number 1. And then, mathematically also I can discuss. So let me ask you a question. You invest in you trade, speculate, or invest. You put money somewhere, and the value of that asset class goes down by 50%. How much do you need to come back to your original value?
How much percentage gain?
How much percentage gain do you need to come back to your 100 rupees?
100%.
100%. And if you lose 90%, so you invested 100 rupees somewhere.
1000%.
It's 900%.
Okay,
It's 900%. So if you are, let's say you invest 100 rupees or $100 somewhere, it goes all the way down to $10 or 10 rupees. So it has gone down by 90%. For you to come back to the original 100 unit of value, you need a 900% return. And I can tell you there are many people who keep waiting. I say you'll keep waiting for ages. Maybe you will take a next birth. You'll require a next birth to come to that level. One, anyway, it is an asset class which has gone down drastically. So you're continuing betting on a losing horse. It always makes sense to book your loss and go to. So this is where the principle of Warren Buffett comes. Rule number 1, don't lose money. Because if you lose money just to come back to the original value, it requires double the effort.
Right.
People, and this is very basics, 5th standard math.
Correct.
So this podcast, I will just conclude, is for sharing the first principles. Principles are those rules which don't change with time.
Don't change. Right.
10 year down the line, 50 year down the line, 100 year down the line, you listen to it, they will be the same. The manner of investing changes, the instrument can change, where you can invest, how you can invest. So in the stock market earlier, people used to fill forms and then apply for share, and then they would come after a couple of months. And now we just open our app. The way you and I interact, you just told me you want to invest. I opened my app on the mobile, sent you a request. You opened the mobile phone and bought it. Maybe it will become much faster in years to come. But that doesn't change the very principles of investing.
True.
See, the method of buying and selling is changed. Software can change the method. The thinking, the basic idea doesn't change.
Correct.
This podcast is about the first
principles. Also, I think this podcast is about first principles. Secondly, you want to contribute to the wealth of knowledge which is there. And thirdly, I think it is also about attracting the right kind of people who you will be happy to serve and who are looking for people like you.
Yes.
For example, people who are looking for temporary fixes or quick money. So those kind of people will not get attracted to this, and we are happy about that.
We are happy, and as you know, I am very selective in taking clients.
So the purpose of this podcast also is to attract more people who are going to be your ideal customers and who are...
But let me correct you there. I am not making this podcast to attract clientele, right? I've already reached a level where... So that is not the basic idea. In basic idea, what you said earlier, is to document it, put it out there. See, if you gain knowledge, if you're lucky enough to be where I am today, I believe I'm very lucky. So it is God's blessings. Okay, I happen to be in the right field, and like my guru Warren Buffett says, I would be a complete failure if I had done anything else in life.
No. See, what I want to do.
But the basic idea is to keep the body of knowledge out there, and that is a side effect. What you were saying,
it is not about it is not about getting customers. It is about helping more people.
Yes.
See what is happening. You are maybe right now satisfied and you don't need customers. You are very happy with your financial position right now. But let us say there are 10x number of people of what you have right now who are looking for people like you.
True.
Who want genuine advisors. Who want genuine advice. Who want genuine education, financial literacy. But they are getting either misled or they are totally confused. So they would be very happy to come to you to benefit by your knowledge.
True.
And you will also be happy to help them.
Right.
So that is where I'm saying that you will get the right kind of clients and not the kind of clients who will keep pestering you कि 6 महीने में पैसा क्यों नहीं बना मेरा, साल भर में return क्यों नहीं आया, those kind of things.
Point taken.
So what I'm saying is this podcast will also attract the right kind of people who are in search of you.
True. Fine. And that is besides the point. That is not the primary objective. And let me give a SEBI disclaimer here. Then I'm not an advisor.
Okay.
I'm an MFI registered mutual fund distributor.
Okay.
Right. I help you reach your goals. That is my objective. And let us give a disclaimer here. Not only mutual funds, but all investments are subject to market risk. And not only market risk, investments are subject to many more risks. And you should not only read the offer document carefully before investing, but you should read whatever you can before you invest, while you are invested, and even after you have come out of that investment. Okay. And that is how everybody should approach the subject of investment. See, investing, we are in a knowledge industry. So humanity started from agriculture. Then we moved on to industrial revolution. Okay. Then service industry. And this is a knowledge industry.
Yeah.
Okay. So if it is a knowledge industry, the only way to make money out of it is by reading as much as possible. So Charlie and Warren are known as, Charlie has a habit of going upstairs in his room, Warren Buffett, and both Charlie Munger. And there is a book which he always has in his mind sitting on his rocking chair. So if you take a photo, he says, I am a book with legs. That is how he describes himself.
Okay.
And these guys are learning machine. So my objective also, if I want to be successful in this field, and if you want to be successful, is that we should all be learning machines. Right?
Right.
So hence that SEBI disclosure and hence my disclosure. You want to be successful in the world of money, in the world of investing, start reading. And there's no end to how much you can read. You have never read enough.
Thank you for listening to the AUM Finance podcast. Remember that all investments are subject to market and other risks, and one should read offer docs and other documents carefully before investing.